In this video, I'll be taking a look at the financial sector of the New Zealand Stock Exchange and taking a look at the major banks to see which of the bank stock is best for you. As per usual, this video is not meant to be financial advice, so be sure to do research on the companies yourself or consult a qualified financial advisor. Now, without further ado, let's get straight into it. There are actually not that many banks that are listed on the New Zealand Exchange, and the three that are listed include ANZ, Westpac, and the Heartland Group. We'll be doing a comparison of the key ratios of the three different companies, including dividends and their stock charts and their intrinsic value, to see which one is the best out of the three. Now let's talk about the three key players, and we'll start off first with ANZ. ANZ is New Zealand's largest financial services provider after the merger of the former ANZ Banking Group and the National Bank of New Zealand. Together, they rebranded into ANZ Bank of New Zealand. They provide personal banking services, business banking services, asset management, insurance, and various payment options. Next up, we have Westpac. Westpac is the second largest bank in New Zealand after the merger of ANZ and National Bank. It currently serves 1.5 million customers. Their customers include individuals, small, medium businesses, corporations, and they also serve as the main bank for the New Zealand government. Last of all, we have Heartland Bank. Heartland is the smallest bank listed out of the three listed banks on the New Zealand Exchange by far, and they're best known for their services to personal and small and medium businesses, and also their award-winning savings accounts. Now, with our players introduced, let's go have a look at the key ratios of the three different banks. First off, we have ANZ. ANZ has a market cap of $58 billion. A P ratio of around 9, earnings per share of 2.29, and a return on equity of 7.74%. Now, because this is a bank stock and not a growth stock, I don't really expect the return on equity to be that high. They have a current ratio of 2.64, which is a good thing because this means that they have significantly more current assets than their current liabilities. They have an estimated growth rate of 6.72% and a dividend of 6.16. Next up, we want to compare it to Westpac. Westpac market cap of around 70 billion, P ratio around 7.7, earnings per share very similar to ANZ. Their return on equity is slightly lower than ANZ, but it's roughly around the same ballpark. Now, their current ratio is not as good as ANZ, and their growth rate is estimated to be a little bit higher than ANZ at 7.45%. Their dividend yield is at 6.5% over the past 5 years. Lastly, we have Heartland Bank. Heartland Bank only has a market cap of 716 million, so this means that they're around 80 times smaller than ANZ in terms of market cap and around 100 times smaller than Westpac. They have a P ratio of around 9.5, which all these bank stocks have a similar P ratio of around the same ballpark. Their earnings per share is significantly lower compared to the other two banks at 0.131. Their return on equity is slightly higher at 10.27. Current ratio also pretty low at 0.2. Their growth is also estimated to be lower compared to the other two major banks at 5.5%. However, they currently have a higher dividend yield at 8.8%. Let's now go take a look at the stock charts of the three different banks. This is the stock price chart for NZ over the past year. So as we can see, the stock price is in a general long-term downtrend over the past year. And when the current crisis happened, the stock price pretty much just fell off a cliff and struggled to gain any traction over the lockdown period. And when the news broke that we were returning into level 1, the stock price bounced up again, and currently it's going down again. The stock chart for Westpac is quite similar to ANZ. So again, it's been in a long-term downtrend for over the past year, and then the price just tanked after the current crisis, and then it started rising again when level 1 is announced. So it's pretty much following the exact same trend as ANZ. Heartland Bank, on the other hand, is slightly different. Before the lockdown occurred, the price of the stock is in a general uptrend, and then when the situation hit, the price went down, and currently it's climbing back up again, much like the other two bank stocks. One thing to note is that bank stocks are not growth stocks, so I wouldn't really expect massive increases in stock prices. What we could also do here is to overlay the Westpac and Heartland stock price charts on top of the ANZ stock price to see the difference of the three. So we have Westpac. We can overlay our Westpac in a purple line, and then our Heartland group denoted in our pink line. So as we can see here, over the past year, the purple line of Westpac pretty much follows exactly the ANZ trend line, whereas Heartland had a spike around the beginning of 2020, but then now it's fallen more similar to the other two bank stocks. If we simply look at the overall performance of the bank stocks this year, we can see that Heartland has slightly underperformed the other two bank stocks. Next thing that we're going to do is to go through the spreadsheet to look at the intrinsic values of the three different banks. This is my intrinsic value calculation spreadsheet. So first up we have ANZ. So I've entered the stock price, the earnings per share, the growth rate, and the 5-year PE high and 5-year PE ratio low. And I've adjusted the rate of return from 15% down to 10% because it is a bank stock, and generally I probably expect less rate of return when it comes to bank stocks. If I leave margin of safety at 50%, pretty much every single stock on the share market is overpriced at the moment. So adjust the margin of safety yourself to a value that you are more comfortable with. If you're interested in how I came up with the calculations, I have a video detailing how I did the calculation, which I will link in the description. Overall, for ANZ, the intrinsic value for the stock is around $25, and currently the stock price is at around $20 per share. For Westpac, I did exactly the same thing. I entered the stock price, earnings per share, growth rate, rate of return, and I've got an intrinsic value of around $30 for Westpac, and their stock price is currently at around $19.50. Exactly the same thing with Heartland Bank, stock price, earnings per share, growth rate, and I came up with an intrinsic value for Heartland of around $1.4, and they're currently trading at $1.22 per share. So simply based on the intrinsic value calculation, Westpac has currently more upside in terms of intrinsic value compared to the current price, compared to the other two banks. In conclusion, a really important thing to note is that both ANZ and Westpac have a positive cash flow, while Heartland Bank currently have a negative cash flow. So if more businesses shut down and they cannot pay off their loans, Heartland may be more affected than the other two banks. Because of the low growth in stock price and generally high dividend yield of bank stocks are usually a pretty enticing option if you're into dividend investing. However, dividends are currently suspended for both ANZ and Westpac. So if you are investing into these bank stocks purely for dividends, you might want to wait till the news announcement for their dividends. Heartland has paid out their dividend back in March, but we don't yet know what the future dividend payout is going to be like, so be sure to keep a note on that. Overall, stocks for ANZ and Westpac have quite similar key ratios, and their stock prices have been behaving extremely similar over the past couple of years. So basically pick whichever one that you prefer. Personally, I may be slightly leaning towards Westpac because they have a healthy cash flow and is the bank of choice for the government. And they have a slightly higher estimated growth rate compared to ANZ. But that is just my opinion only. Be sure to do your own research, and I'll see you in the next video.